Everyone's telling you DSCR loans are the cheat code to owning rental properties without crushing your credit. But here's what they don't tell you. If you follow the wrong lender's rules, you'll end up stuck, overleveraged, and locked into a deal you can't exit from, just like a traditional loan, like you're a home buyer. So today, guys, I'm going over how to break down a DSCR loan if it's right for your rental portfolio. So the first trap everyone seems to want to talk about that's right on the surface level: W-2s, DTI, debt to income ratio. You don't need personal income. You don't need personal docs to get into a DSCR. That is correct. You do need to have a credit score, though. The lender will pull your credit and they will look at your credit score. If it is a bank or credit union, they will consider your DTI. That will be a problem. But we're going to go deeper than that. We are going to discuss some of the ins and outs of DSCR loans because they're not all perfect. Just like any loan, it has its downfalls. There's prepayment penalties, there's reserves, there's different types of leases that you can and can't have with specific lenders. Some require you to have the property rented already on a long-term lease. There's just a lot of different pieces. So guys, DSCR loans are just not a one-stop shop and it solves all your problems. There are downsides to them. So let's get into it. Unstable cash flow. There are lenders out there that do not like Airbnb or midterm rentals where they're rented for 3 to 6 months. They want to see your property leased on a 12-month period to where it actually is cash flowing and they can see it and it's all nice and pretty. They want it wrapped up in a bow. Guess what? There are lenders in the DSCR space that will let you buy a property that is not rented. Typically, they want to see it within 6 months. So if you're going to purchase it, make sure it hasn't been vacant for less than 6 months. Some will do different criteria, underwriting criteria, I should say, but just know that there are lenders out there that let you rent it off of comps that are in the actual local market. And we'll get into that in another section on appraisals. The other thing is fluctuating rent up and down with Airbnb, short-term and midterm rents. Banks and credit unions struggle with it. They don't want to book that out just for the simple fact is it's a lot more work and effort for them to get to a number. The thing that I want to tell you is when it's outside of a box, you need to go to a non-qualified mortgage or a lender or a broker, because a credit union and a bank are just going to stay within a box to make it very simple so they can originate, call it a day, and move on. Also in this space, they're going to look at this. They want to know it's 1, on a long-term lease, like I mentioned before. 2, are you using a property management company? They want to make sure that you're set up and you're doing all the things that they're looking to do to check the boxes to make it very simple. But I know most of you guys out there are not actually using a property management company, especially on your first or second deal. It doesn't make any sense. It's not giving you enough cash flow, so you'd be losing on the deal. So be aware of that. Underwriting and appraisal chaos. There's a lot in this space, and I'm going to try to balance it out as much as I can. Appraisals, they're dictated by the appraiser themselves. So when you have somebody coming in to do an appraisal on your property, know that it's really subjective. This person is going to try to pull as many comps as they possibly can to give you the best estimate of value, but they're also human. And I've done enough appraisals in this space to know that there is some bias because some appraisers just don't like doing rental properties. They think that it potentially brings the neighborhood down when you have rentals. So be aware of that because there is bias, but also at the same time is there isn't an appeal process. It's tough, but you can go through it. The other piece of this section, underwriting. once you get all your documentation together, and we'll talk about that in another video, once you get all that to your lender broker, they will send that to the underwriting department and they'll go through your file and they'll take a look at everything. And if there's something missing or something they require, then they will ask for additional documents. Sometimes midstream, and I've not seen this happen too many times, but it does. The lender potentially will want more reserves. They want a different lease structure. They might want you to change your LLC's operating agreement. I see that quite frequently. So be on the lookout for that. Another thing when you're talking to a lender broker, ask how many deals have they done? How familiar are they with DSCR loans? If they just say, oh yeah, they're easy to do, red flag, run, go. Keep on going. Somebody that understands DSCR loans is going to tell you, hey, I've done X amount of DSCR loans, single family, multifamily, portfolio, blanket, whatever the case is. They're going to understand the 5 or 6 pieces of information you need up front to get a deal submitted to underwriting and get done. But if they don't get that, it's time to run. Portfolio loans. So it's literally you're cross-collateralizing your properties. You're bundling a bunch of properties under one loan. So it's a blanket. Let's say you've got 5 properties. They're all under that one loan. So you only have to make one payment. The underwriting process is a little more tricky and it takes a little bit more time up front. Let's say you want to sell one of those properties within the first several years. There's a prepayment penalty or a portfolio penalty that they'll charge anywhere between 5 and 20% of whatever the outstanding loan amount is for that individual property, not the portfolio, just the individual property. So if you still have $100,000 outstanding on the property you want to sell, and it's a $10,000 prepayment penalty or portfolio charge, they're charging you $10,000. So be aware of that. The other thing, God forbid, if one of your properties sinks and goes south and you can't continue to make the mortgage, that potentially could sink the whole mortgage, the whole portfolio, and also cause issues. So be on the lookout for that. Is it a lot easier to make one payment on a monthly basis? Yes. If you're going to keep properties for a long period of time, 10, 15, 20 years, then a blanket or portfolio loan would actually work for you. If you plan to turn them over, refinance them, and when I say refinanced individual ones, then this is not your option. Now, if you want to refinance the whole blanket or portfolio, God bless you, go for it. That works perfectly. So be aware of that. There are pitfalls with blanket and portfolio loans within this space. Prepayment penalties, the big one that everyone talks about. In this space, typically lenders are charging anywhere between 3 and 5 years of prepayment penalty. Some will go none, but your interest rate will go straight up. Be aware of that. So how that works, it's a stair step. So if you have a 3-year prepayment penalty, in the first year, it's 3%. The second year, it's 2% and 1% of the outstanding loan. And again, you have a $100,000 outstanding balance. 3% in the first year would be $3,000, $2,000 in the second year, $1,000 in the third year. The payments are not typically hidden. I have seen some bury it in, but I always make sure I give my clients the full disclosure that the prepayment penalty is in place and they either sign up for a 3-year or 5-year if they want that better rate. If they not worried about rate and they're willing to take a hit for a period of time and they've got a great cash flowing property, I tell them waive it. And somewhere down the road, we can refinance and get them into a better rate. Paying more in an interest rate in this space. So balance those out to figure out how long you're going to keep the property and how does that prepayment penalty affect the sale of your property or when you're going to sell it. Hidden fees and some liquidity issues that come along with these properties, with these loans. Points, origination fees, processing fees, they all add up. So Brokered, typically in the broker world, we are charging origination fees. So transparency, that's just where we're at. If you go to a bank or credit union, they'll typically charge you some type of underwriting fee or a small origination fee. But here's what they're trying to do. They're trying to lure you in so you continue to come back to them, and then they max you out. Because once they hit 2 or 3 loans with you, they're making money. So they're trying to get you in. It's like a drug. They're trying to get you hit on the actual product. But really what they're doing is they're ruining your credit because they're killing your DTI, because you're not going to be able to go out and get any other type of credit because you've got all these loans on your personal credit. The other thing that you need to look at is always have a budget outside of down payment. So if you're doing a DSCR, typical down payment is 20%. So on a purchase price of $100,000, your down payment's going to be 20%. Look to have between 4 and 6% in closing costs on these type of loans. It might be a little bit lower, just depends on each lender, but that's a safe number to have. So when you are actually budgeting for one of these deals, budget yourself out for 25 to 26% that you're going to have to come out of pocket to close the deal. Where I see new investors struggle is they think they're coming in with just the down payment and they don't have to worry about the closing costs. They think the closing costs can be wrapped up into the loan. No, they can't. Not on a purchase. On a refinance, yes, but not on a purchase. So a purchase, you have to pay those fees. So be cognizant of that. Put it in your budget. Make sure you're not surprised. Documentation pitfalls. Guys, this happens a lot in this space. What is submitted could be perfectly fine one day with the underwriter, and the next day when we go into final review, there could be some changes in their lending criteria. It happens quite frequently. It's not a bad thing. It's just something that happens. So be open to pivoting to be able to get changes done to your operating agreement, or maybe how you filed your LLC as a foreign entity, your bank account, making sure that you have the right bank information so you can set up your auto pay. Be prepared. You're going to be asked for some business documents. Just make sure that you have them ready. And then if you've got to make changes, it's an easy fix and you move forward. But I can tell you where a lot of my clients can get frustrated at times is the back and forth on paper. I will make every effort I possibly can to make sure that the paperwork is lined up to a T up front. But again, I'm not the underwriter. So we're at the mercy of the underwriter. But the more deals we do, the more insight I have to make sure we get you lined up on the first shot and you hit a home run. Just be prepared with paperwork because it does happen. Last but not least, guys, scaling is great, but you've got to do it right. You don't want to compromise your peace and your values. Just because a lender says it works doesn't mean it's a right fit for you. Dig under the hood, figure out who the lender is, figure out who the broker is. Make sure that you're asking the questions that you need to make sure you're comfortable with getting a DSCR loan, because in the end, you're signing on the dotted line, not just as the LLC, but you're personally guaranteeing this loan. So God forbid if something happens, they're going to come after you for the difference or the balance of the loan if it has to be foreclosed or if it's past due. So please ask questions. And if a lender or a broker doesn't like you asking questions, red flag number 25. Move on, go to somebody else. It will be the best thing that you can do. Even though you're midstream, make the change. It'll save your sanity down the road. Guys, wrapping up this week, thank you for sticking with me. If you like what I'm sharing, please subscribe. I'm trying to grow the community, get the word out there. I really love what I'm doing. I really want to get in front of more people, help more people get to where they want to be with the right tools. Maybe I'm not the right guy. I can connect you with somebody, but I at least want to give you the information so you know where DSCR loans fit into your investment strategy. But better yet, educate yourself so you know who to go to: a credit union, a bank, a broker, a non-QM lender. There's options. You just have to find a way to get to where you need to go and who you want to do business with. So guys, stay safe, stay healthy,